Yeah, thanks, Tim. Appreciate the invite. Okay, so Vmoto, who if you can just skip to the third slide there, but we're an Aussie incorporated and ASX listed, but we are truly global. Certainly operate all around the world, and I'll talk to that in a bit more detail. But in essence, we concentrate on the manufacture, distribution, sales, marketing of two-wheeled electric vehicles, and by that we're referring to mopeds, so Vespa looking like bikes as well as motorbikes. So no kick scooters, but just those two particular streams. We own our own manufacturing facility in Nanjing in China, which is over 30,000 square meters. State-of-the-art manufacturing facility, which we've owned since 2007, 2008. And the idea in really simple terms is to combine European design and flair and branding with low-cost Chinese manufacturing base. And that certainly created a wonderful platform in which to ensure long-term sustainability and competitiveness. Next slide. 3 brands in essence. So Vmoto being one, obviously, Super Soco, second one. So that's not brand, but we operate under a manufacturing JV, and combined with Vmoto retaining the distribution and marketing rights to that brand for all of the markets outside of China. And then the third brand being the Emax brand. And just as a matter of interest, that was the first electric scooter that Vmoto ever produced, which was in 2009. So certainly enjoying a bit of a first mover advantage in that regard. Okay, next. Distribution, as I mentioned, we are truly global. So the corporate head office is based in West Perth. As I mentioned before, we're listed here. We've got the manufacturing plant that's based in China, and that's all about a low-cost manufacturing base. And then our distribution basically is global, with the great majority of our business actually being generated in Europe. Next slide. Okay, so the manufacturing facility, as I mentioned, we committed to that. It was back in approximately 2008, 2009. And it was certainly one of the smarter things that we did. So we bought the land first and then built the building. As I mentioned before, it's over 30,000 square meters. It's wholly owned by us. There's no debt attached to it whatsoever. Importantly, you can't just manufacture scooters, electric scooters in China if you feel like it. You must have government sanctioned license. They're not easy to get. So that in itself is also of significant value. We have ample capacity to support over 10 times the current production volume. So in terms of growth, we're well positioned. And as a matter of interest, we're only carrying it at $5 odd million, which basically reflected our cost. But back in 2009, it's been valued at 12. It's probably closer to $20 million now, and that's without assigning any value to the actual license itself. So really well positioned, as I mentioned, both from a cost perspective, but also from a growth perspective. Okay, next slide. Actually, if you skip to the next one. So I'm just going to talk now about what this all means in terms of the hard numbers. So we've just released our half-yearly results. And as you can see there, revenue of 39 million for the half, which is up 50% compared to the previous period. Net profit after tax of 4 million, up 119%. EBITDA 5.4 million, also up 100%. Operating cash flows were good at approximately 1.7 million. We've got over 16.7 million cash on the balance sheet as of 30th of June, and NTA of over $39 million. So in all categories, we're up, and we're up significantly, particularly on the net profit after tax, which of course is the most important part. Next slide. Okay, and just translating some of that into some numbers. So 13,000 units sold for the half, which is up 30 odd percent. As you can see there, also the great majority of those units sold internationally. So in essence, Vmoto does not sell product into China. That's not our game. We're definitely a global player, and although the market is massive in China, it's also unbelievably competitive. So it's not a place for us to be. We care not to be there. We want to concentrate on those international markets, which are certainly capable of generating the profits that we're after. Distribution network. So again, as I said, we're global, but what does that actually mean in numbers? Over 53 international distributors in over 60 countries. So we certainly covered the great majority of the world. North America is probably one market that we haven't spent too much time in yet, but we're certainly looking to grow into that area soon. The bulk of the business, as a matter of interest, is not selling scooters to individual consumers. It's actually to other businesses that are using our electric scooters and motorbikes for the purposes of A, last mile delivery, and B, ride sharing. And by ride sharing, I'm not talking about Uber. What I'm talking about is a fleet of scooters that are available for people to go and utilize, on an as and when basis. That particular market is huge in Europe. It's starting to gain an enormous amount of traction in North America as well. And that's where a lot of the growth is coming from. Having said that, the last mile delivery segment, so we are talking about Uber Eats, Menulog, DoorDash, KFC, DHL, any of those brands, anything involving the delivery of parcels and or food for the last mile is also a massive growth market for us. And that continues to grow. And we're sort of looking forward to that continuing as we move forward, particularly in an environment where net zero emissions, which has been talked about quite a bit, and the world going carbon neutral as soon as they can, that necessarily relies on the electrification of the transport industry. So we're at the forefront in the effective. Lots of opportunities out there. We are fielding inquiries on an absolutely basis. I participated in a conference call last night with India. India is in fact the largest scooter market. It's bigger than China. So there's some wonderful opportunities out there. Next slide. Balance sheet. So I won't bore you too much with this. Needless to say, though, as I mentioned, 39 million approximately in net assets. So we are really well placed. No debt. We paid that off recently, approximately about a year ago. And it's underpinned by cash, receivables, but also, as I mentioned, the manufacturing facility itself, which carrying value being 5, but it's probably worth over 4 times that. So we are absolutely well placed to enjoy some growth moving forward. Next. So disappointingly, our market cap's only 115 million. I say that in relation to which I think both the managing director and the CFO should be congratulated for. I mean, it's outstanding with growth rates of approximately 100% across the board in essence. So the numbers that we talked about before were only half-year numbers. So we're on track for realised revenue of approximately $80 million and a net profit after tax of circa $8 million. So we're being priced as an income stock when we're quite clearly a growth stock. So a little bit different, but you can see there how it looks. The top 20, over 52% of the register, and probably worth noting that the single biggest shareholder is the company's managing director. So absolutely perfect alignment between management and shareholders in terms of where we want to see the share price going. Okay, next. So as you can imagine, the outlook is pretty good. We're expecting to continue to enjoy the growth rates that we have over the first half. And as I'm sure you guys will appreciate, or the listeners will appreciate, that the world is going net zero by 2050. That's the goal. As I mentioned, the transport industry is one of the biggest emitters, and therefore the electrification of that industry is absolutely paramount. And Vmoto were one of the first movers into that market back in 2009, and we are absolutely well placed to continue to grow at the rates that we've currently been going at. And the future does look really bright, and I think we deserve some more attention. We're looking forward to not only the next 6 months, but the next 4 to 5 years is pretty exciting times, I think, for the company. And that's it. Thank you.
Thanks, Blair. I think this is a fascinating story, actually, and I think it is off the radar of investors. Can you? I've got a lot of questions here. Are the current problems with global supply chains affecting your production rates?
Not affecting production, but definitely affecting distribution. It is chaos out there. I don't think most of the sort of market understands how bad it is. But to give you an idea, a typical 20-foot container from Shanghai to Europe was costing about €3,000, and now it's €18,000. And it's absolutely extraordinary. So it is chaos. So it's certainly impacting our ability to distribute, but it's not impacting our ability in terms of production. And that's because all of the suppliers are actually all based in China already. So that's not really an issue. We do expect it to normalise. It's just going to take a little bit of time, I think.
I mean, there is a question on that. If you could talk to your access to key input materials, components, microchips, rare earths, lithium, it's all becoming increasingly a key to manufacturing and marketing sustainability. Can you comment on your kind of supply chain arrangements?
Yeah, so I think, look, in any given electric scooter, essentially the three key components are the battery, the motor, and the controller itself. So most of the motors that we use are Bosch, so from the large German conglomerate, so no issues there. In terms of batteries, the key suppliers are all the names that the market probably already understands. So we're talking about LG, Samsung, Panasonic, and ATL. ATL being the battery you find in an iPhone. So they are the biggest companies in the world that are manufacturing the batteries on our behalf, and the controllers are locally made. The only other key component is the IoT device, which is not always installed, but that's the key device which makes the scooter smart, which is very important, certainly for ride sharing and for last mile delivery as well. But I think, I guess the point really is that you've already seen a lot of those major manufacturers of particularly the batteries starting to engage directly with producers of some of those key materials. So LG signing up, directly with a mining operation for lithium, and you've seen Tesla doing exactly the same thing for nickel. So it's not for us to do it. We're certainly relying on our main suppliers to take care of that, but I think it's fair to say that they're well and truly onto it. And they're certainly we're not suffering any delays as a consequence of lack of raw materials going into our major suppliers. So as it stands, we're all good, notwithstanding that we're probably going to install 25,000 batteries this year. We're comfortable, not suffering any delays, but we are relying on those key suppliers to take care of their own business in terms of underlying supply of raw materials.
And EV battery transport forms of transport have been known to be more expensive than the traditional user. Well, how does your pricing compare to competitors? So if you go into pitch to one of those large buyers, how does that stack up?
Well, I think the answer is that like cars, electric scooters are more expensive than their combustible engine counterparts. But the cold hard reality is, as I mentioned, Europe is our biggest market, and the market is not interested in using combustible engines. So at the end of the day, they are only looking to source electric vehicles for the businesses in which they're rolling out. So it's just not an issue for us. As long as we're competitive within the EV space, that's the only thing that matters. I think it's fair to say that combustible engines are dead. When I say they're dead, I mean, obviously still it's a massive market out there, but everybody is switching to electric. So these new business models that are being driven by smart electric scooters that are relying on the interaction of the consumer, their mobile phone to unlock the bike, to identify themselves, and all of those things are simply pointing to the use of electric only, not combustible engines. So the fact that they are a little bit more expensive, it's a non-issue. To sort of just be a little bit more specific, in Australia, the retail price of an electric moped that we sell is had under $5,000, and you could probably go and buy a combustible engine version for $500,000. That's just not where the market's going, so we're not really worried about that.
Understood. And a number of questions here around who are your key competitors?
There's a couple. There's a German manufacturer by the name of Govex, which are doing very well within Europe. In fact, they're probably the number one player in Europe in terms of EVs from a moped perspective. And the other major competitor that we see is a company called New, which is a Chinese-based company, but is listed on the NASDAQ. Market cap is about 2 billion. We actually outsell them internationally as a matter of interest. They do 380,000 units though in China, which is not actually big in the Chinese sense, but they are the most active in the space in which we're operating. So as I mentioned, they're more focused on the ride sharing aspect. Our focus really is last mile delivery. But I would say that those two companies in particular would be our major, competitors. All of the big brands, which some of the listeners are probably keen to understand, I think you can expect them to start producing and marketing electric scooters, but there's a real reluctance to do it at the moment, and that's to do with their upsetting their traditional distribution networks. So when Honda and Vespa and the rest of them start marketing these things globally, I don't know when. I think it's inevitable, but they're certainly focused also on the consumer market, not in the markets that we're focused on. So again, I think we've got the first mover advantage. It's working well at the moment. Our growth rates are fantastic. We don't expect that to stop anytime soon. And I think in the end, if we focus on those particular markets, we'll be even when the big boys do arrive.
And Blair, just quickly, what's the revenue breakdown in terms of geography?
I don't know what it is exactly, but I would say the great majority, without a doubt, is Europe. We've not really targeted the US yet. We're in discussions with a couple of companies in that particular market. And then, as I also mentioned, for us, India has the potential to dwarf the rest of the world in terms of their requirements. From a government perspective, they've already decided that they're going electric. So that's gaining momentum. But I think the short answer is I would estimate circa 70% is probably Europe for us.